who's Chief Executive of Asset Owners Disclosure Project. Good morning, Julian.
Good morning.
Good to see you.
Good morning.
Now, just explain why nearly half of them are doing nothing about this.
Well, the reality is that climate change has become very much an economic and financial issue. It's no longer just an environmental one. Of course, we live in a time where short-term share markets dominate everything. But there are a bunch of investors, particularly these asset owners, insurance companies and pension funds, who are incentivised to look at the risk of climate change over a much, much longer period, more like 20 years. And essentially Mark Carney, in his speech to Lloyd's back in November, pointed this out, this tragedy of the horizons, whereby short-term markets, mainly because of things like a lack of carbon price and other incentives in the market, will eventually affect, or could eventually affect, financial stability once the markets begin to reassess the risk.
So what do you think will cause us to change behaviour in the sense of those who are managing our pensions, etc., who are assuring our financial futures will make good choices about this kind of thing?
Yeah, the reality is a lot of these asset owners give their money to shorter-term fund managers to invest in the markets, and that's part of the disconnect. Some of the leading asset owners in our index, which was launched today, are actually essentially they're not really believing the way that the markets are pricing it in the short term. And they're deciding to do other things in the long term. They're investing more in renewable energy and so forth, and they're devising new low-carbon indices, ways that they can decarbonise their portfolios, so that if, in the words of Mark Carney, there is a wholesale reassessment of prospects, that the market changes very rapidly, that they're better protected in their portfolios.
I mean, just to kind of put this in perspective for the layman, just reading some of the information in your report, it's quite staggering that the figures, if there was some kind of major, climate readjustment that was negative in terms of the money lost and the impact on our economies and our security.
Yeah, I mean, look, we're only 10 years, less than 10 years on from the last big market collapse. The reality is that your average pension portfolio has much greater exposure to climate risk than it did other sort of mortgage-backed securities back in 2007. So it's in more than half of a pension portfolio. And therefore, if the markets do start to move, and there's a whole bunch of uncertainty around this, what happens if there's another hurricane in Boston or somewhere further north, and suddenly markets get a sense that governments are going to have to move really, really quickly, and that rapid reassessment of the risk is what's going to produce the market instability.
All right. Well, Julian, thanks for coming in on a bank holiday Monday. It's so early. We do appreciate it. And you can read more about that online. Lots of detail. Do take a look. But let's squeeze in some other business stories before